Now, on the second part of qualification, which I talked about, is your job and your finances. So you have to have, it has to make sense. When we put it together, you need to be able to make the house payment legitimately. You can't state this and, oh, you have this, and sometimes you get a bonus here. Well, if you get a bonus, it has to be shown for the last 2 years and that you actually get it. If we can qualify you with all of your debts, that's your car payments. Now, debts aren't, a lot of people think and ask me, well, I have my cable, my PG&E, and this and that type of thing. Those aren't your debts. Your debts are what are on your credit report. So your car payment, Jim's case, your airplane payment, your, your credit cards, those type of things. Those are the things that are on your credit. Those are your credit debts. So you take those, and then your house payment, and if it makes sense, if you can make the payment, then we can make it work. You added what this house payment's going to be: principal, interest, taxes, and insurance. All your other credit debts, car payments, credit cards, anything like that. Add them all together, and you take your gross income. If your gross income is more than double what all those payments are, for instance, I have a $1,500 proposed mortgage payment, a $500 car payment, and $500 monthly credit card bills. So I have to pay out of pocket with this proposed mortgage $2,500. If I show my gross income being over $5,000, we can typically make it work. So pretty easy. Rule of thumb, you want to be under 50% debt to income ratio. So, and if you're over 50, or if we run our automated approval and you cannot qualify, then we'll look at your savings, what kind of gifts your family would give you, and see what we could pay off to make it work, or if we need to go to a lower priced home. And I think that's where lending went wrong in the past, and why we're having a seminar now is that, people were doing loans where they were buying $500,000 or $1 million homes on $100,000 a year. Well, if you only make $100,000 a year, you shouldn't be in $1 million home. On stated income, stated asset, and a neg am loan, it's going to blow up sometime, and it did blow up, right? So now the loans are, do you have somewhat decent credit, and can you make your payment legitimately? For jobs, what they like to see is 2 years history in your job, and they'll average your income if it's hourly or if it varies. So we'll average your income, and then if for some reason you haven't been in the job 2 years, if you're a salaried employee, not hourly and not commission, but actually a salary position, and you went to training or schooling for that, then they'll actually qualify